And those Chinese ADRs got absolutely smoked. Do you believe that this is what we saw? Some juice coming out of the Chinese names and anything with the exposure to China into the Mag 7, or was there something else going on?
Yeah, I do think so. So I think there are two things here. Chinese ADRs, I mean, that was a disappointment, the fact that Chinese ADRs fell. But in some ways, it was expected. When stock prices went up dramatically after the stimulus, our team was never in the camp that this was going to continue. And the biggest reason is because there are structural problems that these stimuli actually don't really solve. And I think today was a testament to the shortcomings of these stimuli. Not only was the announcement but falling short of expectations, but the stimuli actually don't really guarantee that the Chinese economic trajectory is going to change, because we have a balance sheet recession type of slow growth with a lot of debt in the books. And then, of course, there's the geopolitical problem. We have learned in recent years that China has become, again, an export-oriented country. It's relying on other countries to buy their goods in order for them to grow. But as we know, there are a lot of tariffs that are being instituted. We're talking about it here in the United States. We've heard about it in the European Union. So as long as these tensions exist, the ability for the Chinese economy to grow organically, there's going to be a lid on that. So I don't think anything is really going to satisfy the markets. And if it does, it's going to be temporary, and you have to keep feeding that beast.
So would an announcement of 2 up to 10 trillion RMB from the Ministry of Finance in the coming days or weeks change the narrative for you then?
Well, so the question is, how long does that last? Right? I mean, is it going to be a year's funding or 2 years funding? One of the things I noticed was there's a little bit of a pulling forward of borrowing, right? So that already tells you that they're way behind. And the language there is, okay, we want to hit 5% target, but we also want to stabilize the economy. Stabilizing the economy tells me that it's unstable, right? So how do you go from an economy that feels like it's shrinking, it's unstable, to 5% growth? There wasn't that much detail there. So even if there's this idea that there's stimulus coming in, the question is, where will they go, what will they fund, and how will they be allocated? And none of those details were provided today.
Yeah, none of those details have been provided today. Anna, do you think that's primarily because policymakers don't want to set a benchmark in terms of the kind of euphoria they've already seen to there being no number signaling their support or the quantum of the support they're willing to provide to the economy? And already we've seen this crazy frenzy, so they don't want to stoke that even further.
It's possible, yes. I mean, it's definitely possible. A lot of the frenzy is partly because, all of those rate cuts that we have seen in the last, several years, it was always not enough. And it might have actually also caught them by surprise when the markets reacted that way. So it definitely could have been a way for them to just tame it a little bit, because frankly, there was a sell-off, but it didn't go back down to, the dismal levels, right? So maybe it's a way of stabilizing it. But at the end of the day, so some of the structural problems in the Chinese economy remain. And so now the markets will be watching very closely what type of stimuli come next.